Hi guys. So right now it is like Tokyo and Sydney session of the February 6, 2026. So I'm going to talk about market structure for gold today. So as we can see that from the higher time frame like weekly chart, we have the very sharp spike last week. And then there's a steep plunge from 5,600 to 4,400 this week. And then we have a bounce back to around 50.90. So as you can see in the weekly chart, this weekly bullish trend has started since October 2023 and has seen going up consistently until right now. And the weekly structure hasn't broken yet. So I'm expecting that the bullish trend is continuing unless there's a break in the weekly structure. Specifically, there's the break in the 4,400 or this level. We can see that it is also around the level of the previous weekly high at 43.83. So around 43.83 and 4,400. So unless there's a break in the structure of the weekly chart around this level, my bias is that we can continue to see gold trending upward. So that is the weekly chart. But if we zoom in further, for the daily trend, in the past 2 or 3 days, we have the resistance level around 50.90 and at around this level 46.96 or 4700. We have this level of a range bound. The market is trading around the range bound here. So if there's a break in the range bound like this, 46.90 or 46.80, and then 50.90 or 50.80, I'm going to commit my capital when there's a decisive break beyond these two range bound levels. So that is my thesis. And if we look at the 4-hour chart, we can see that there's a consistent selling pressure from 50.90 or 50.80 levels to this 46.60 or 46.80 level. So this is consistent selling pressure. However, only until then it reaches the level of 46.60 or 46.80 around 4 hours ago or a few hours ago, we can see that there's a very long lower wick 4-hour candle like this. And this is the green candle, which tells me that there's a strong buying pressure around here. So my bias is that gold will bounce back from this level back to mid-range, or even to challenge the upper range level around here, 50.70 or 50.90, and only until it decisively breaks the upper level around here that we can see a stronger rally. Until then, I'm not gonna commit a lot of capital to at this level. So overall, I expect that the bullish trend for the long term will continue, because we have a lot of geopolitical and the high level debt of the US and the deficit, and although we can see that people reacting not very good for gold when there's a news that Kevin Walsh is nominated to be the next Fed chair, but my bias is that the theory that Kevin Walsh is more hawkish and he's not going to cut rates is nonsense, because Trump takes so many months to pick a new Fed chair, and he's not going to be stupid to put someone hawkish into the chair of the Federal Reserve. So, and also there's a high level of low liquidity, and also of high level of debt. And whenever we have a 125% debt to GDP ratio like the US, the political leaders has no choice, no better choice than to devalue the dollar. So that's my thesis, and this is only for educational purposes. This is not a financial advice. And thank you for watching, and see you in the next session.